So what exactly is a stock? Simply put, a stock represents ownership in a company. When you buy a stock, you literally own a tiny piece of that business. Pretty cool, right? Think of it this way. Imagine your favorite company is like a chocolate cake cut into thousands or even millions of slices. Each slice is what we call a share. When you buy a share, you're basically saying, "I'll take that slice of the company, please." For example, if a popular streaming service was divided into 10 shares total, and you owned 5 of those shares, you'd actually own half of that company. In reality, big companies have millions of shares, so you'd likely own a much smaller percentage, but the concept is the same. You might be wondering, why would a company want to sell pieces of itself to random people? Good question. Companies sell stocks primarily to raise money. Creating and growing a business is expensive. They might need cash to build new factories, develop new products, expand to different countries, or even just pay their bills. Instead of borrowing money from a bank, which they'd have to pay back with interest, they can sell shares of their company. The money they get from selling these shares doesn't need to be paid back. It's theirs to keep and use. Let me break this down with a story about Maya and her dream sneaker store. Maya wants to open Fresh Kicks, a store selling limited edition sneakers, but she's calculated that she needs $100,000 to get started. Unfortunately, she only has $50,000 saved up. Instead of taking out a loan, Maya decides to divide her business into 10 equal shares. Since she's putting in $50,000, she keeps 5 shares for herself. Each share is worth $10,000, so she sells the other 5 shares to people who believe her sneaker shop will be successful. Jordan, a sneakerhead, he buys 1 share for $10,000, which means he now owns 10% of Fresh Kicks. With the money from Jordan and 4 other investors, Maya now has her $100,000 and can open her dream sneaker store. Fast forward 5 years, Fresh Kicks is absolutely crushing it. Maya has opened 3 more locations, and the business that was once worth $100,000 is now valued at $300,000. Remember Jordan, who invested $10,000 for 1 share? His 10% ownership is now worth $30,000. If he decides to sell his share, he'd make a $20,000 profit. Not bad, right? But investing isn't always a success story. What if Fresh Kicks struggled to compete with online retailers and the business value dropped to $80,000? Jordan's share would then only be worth $8,000, meaning he lost $2,000 of his investment. Ouch! This is exactly how stocks work in the real world.